Welcome back, everybody. I've been silent for almost a week now after the NIO earnings call, which I covered live. The reason was that obviously I made it from the airport. I've been away for a couple of days and traveling, busy with some other stuff. But now, especially after yesterday, where I've seen that the sentiment in social media is really bad. Also, my Patreon community, people are asking, Marcel, we need some clarity. What's going on? What's your thinking of the recent stock price movements and also fundamentals like the deliveries? So here am I back and giving you my thoughts on that in this video. So stay tuned till the very end. I'm first going to give you some other reasons that I think are interesting and indicators to watch, and then going a little bit into comparing NIO currently with Xpeng, because I think there are some interesting things to say about at a point where, frankly, investors, lots of retail investors also, but also maybe institutional ones, do see Xpeng as the better behaving asset and with the better future. So I want to put out my perspective on that. As always, it's not financial advice, but hopefully giving you a little bit of a brain pick into my thinking here. So first off, this is the NIO chart, as you can see, and I want to pull out something called the Global Liquidity Index, which is now appearing in yellow. What does it mean? It does mean global liquidity available to financial markets. So that's not only the US liquidity, but the whole globe. So that metric in yellow here is dependent on what the Federal Reserve and central banks all over the world are doing. As you can see with the spike here during the corona lockdowns and so on, NIO really shot up in sync with the liquidity available in the markets. And then as we got the Fed tightening, you see the drop continuing. And what we can say here is that there is quite a bit of correlation with NIO stock versus this liquidity measure. Let me align the stock here a little bit more. For the recent couple of trading months, what's interesting here, for example, is that you see a correlation that is pretty much in sync with the liquidity index and NIO stock. But there have also been times like here in August 2023 when NIO could actually shoot up while liquidity is actually going down in the markets. And that has been due to the reason back then, the rumors with, first of all, Xpeng merging with Volkswagen there or getting the buy-in, and then also rumors around NIO and Mercedes, right? But in the end, liquidity kept draining the markets, and I think there is a hard time for NIO stock to fight this trend other if we got real fundamental improvements, where it can really get out of that. So my first point that I want to make here is that I don't think yesterday's stock reaction of 7.7% down was a real issue with the weekly deliveries. The fact that we got 1,300 Envos delivered or registered and around 4,000 NIOs. That might be something that investors perceive as negative. However, I do think it's not the main deal why we get stock price movements that can be very volatile in NIO stock. I think a larger problem are such macro factors, and NIO is, I think, more exposed to such fluctuations than, for example, Xpeng or some of the other names, because NIO is currently on a still on the trajectory of having higher net losses than other companies, and so the financials are just not as strong in this regard, or let's say there is more volatility, more risk associated with NIO, and that's why I think it's also trading so much in sync with the liquidity available, because it's very simple. Like if there's an abundance of liquidity, then people can take more risk, and NIO is considered to be a risk asset, an extremely risk asset, right? So whenever we either get a very big fundamental improvements or b the rise in liquidity globally, then it will lead to this huge spikes in NIO stock, in my opinion. So that's why I think, NIO stock is reacting currently strongly. Also, by the way, some other stocks like Polestar and Nikola, they have been impacted yesterday, and I think all of them are trading in a little bit of a basket of the more risk associated names, okay? Versus, that's what I now want to talk about, a stock, Xpeng versus NIO. Xpeng definitely is being perceived right now as a less risky name than NIO because they've put out some very solid new models currently and have rising sales numbers, and also they have less of a cash burn than NIO currently, and so it's become less volatile and has fewer of those drawdowns than NIO. But what I want to show you guys is comparing NIO's efficiency in sales versus Xpeng's, because out there, I think the investor consensus right now is that Xpeng is performing so much better than NIO and is delivering faster and more than NIO, is growing better. But I have some facts here that I want to put out there in order to challenge this narrative a little bit. So first off, NIO's got more than 100 NIO houses and more than 260 NIO spaces. These are the smaller stores that NIO has, versus if you look into the latest Xpeng figures, it's more than 600 stores that Xpeng is having. In Q3, NIO delivered 61,855 cars versus Xpeng less than NIO, 46,500, right? So if you count that per store type, that would make more than 520 sales through NIO houses if each of those deliveries were actually acquired through NIO houses, versus for NIO spaces more than 235. So that's obviously much more than the 73 deliveries per store by Xpeng in Q3. Of course, the projected deliveries for Xpeng are very bullish right now, more than 90,000 in Q4. So they're gonna double that number and that efficiency to 141. However, that is still lower than if NIO meets those projected deliveries of the lower side, 72,000 for each of those metrics. I know we cannot differentiate between NIO houses and spaces here in this way, and we need to put them together. So the real comparison should be this table, where we have the NIO stores at more than 380 versus the Xpeng stores still at more than 630. So based on that, currently in the Q3, NIO is still more than double in efficiency in terms of sales per store versus Xpeng. And even if Xpeng closes the gap here in Q4 and NIO is delivering at the lower side of 72,000, then it's still 188 deliveries per store for NIO than for Xpeng at 141. So this showing us clearly here that NIO's sales efficiency is actually quite good, especially considering that NIO's cars are more premium and more higher priced than Xpeng's cars. And this is kind of, I think, taking away a little bit the argument that Xpeng is performing much better than NIO on the fundamentals, on an operational basis, on an efficiency basis. Yes, it's true, and I don't want to talk it down that Xpeng has managed to ramp up the latest platform much quicker than NIO, and we're still about to see how Onvo fits into that. Definitely the number of stores for NIO is going up now, but for now we can just not use the Onvo numbers included in all of that because it's still too small. But if NIO manages to actually outcompete Xpeng here on this sales metric, just on their old brand, the NIO brand, a more premium brand, then that's actually quite a bullish signal for Onvo going forward. If Onvo, for example, manages to build out another 300 stores, but is possibly even making more deliveries per store than actually in a NIO store, because one should assume that's going to be the case, right? Because, of course, the Onvo is a more affordable brand in the end. So that, of course, leaves us still with the problem that Onvo is ramping slower than, for example, the Xpeng Mona. I've talked in previous videos about the fact that I think that this has also some implications on the sales model, meaning that Xpeng is selling Mona through existing stores. And by the way, is also bringing Mona to the market on a existing architecture that has also been used with the G6 already. So that's helping on the operational side of ramping up the car production and so on. In my opinion, that's just what I see from the outside, okay? And for NIO, I think, you know, I always had the expectation that Onvo is going to take some time. And now that we also get the feedback again, or the renewed confirmation by both NIO CEO in the earnings call, as well as the Onvo CEO on Weibo, that they want to hit their delivery targets. I think it's rather a question of time until we get to the numbers that we need to be. As I said before, I haven't seen Onvo in person myself, so I cannot say that I'm, you know, very convinced about the product itself yet. I cannot say whether or not it's better than, for example, what Xpeng is doing with the Mona, only from some distant observations. But I'll be traveling back to China next week, and I will surely take a look at Onvo for the first time and tell you how I think it will compete against you know, the Seekers, the Xpengs, and so on. But just based on these numbers that I put out here, I'm not too worried that they can make the case of scaling up Onvo successfully. Now, if on top of that I'm getting really bullish and convinced on the product itself, I think I might actually, you know, increase my expectations towards that. For now, I'm still kind of, you know, a bit conservative for this year. I think they're going to hit their December goal as they outlined, although it's a production capacity goal for 10K, which they set in December. I'm not reading into 10K deliveries at really. We'll see. Happy to take a positive surprise there. And then the big question will be Q1, where they have really, really big numbers, but that's something that I'm going to talk on a separate video about, because this is going to be a game changer if they're able to hit those numbers in a week's seasonality. So I think for me, it's time to hold back some final conclusions on that topic until I see Onvo in person in the next couple of days in China. And now I just want to repeat, I think we see mainly a liquidity crush of NIO stock here, not so much fundamentally the doubt around Onvo and deliveries in comparison to Xpeng, although this has some implications when it comes to the investor perception of which stock is currently investable and risky or not risky. Let's hope liquidity can get pumped up there. I've seen some takes on X that the Fed seems to be concerned around a liquidity problem currently. Let's see, maybe next week we'll get some news on that. Anyways, that's been some thoughts for now. Thanks for watching, and see you in my next video.